Welcome to my YouTube channel. In today's video, I'm teaching you how to trade the Fibonacci level strategy and make profits in the forex markets in any trading charts you are trading. If this is your first time in this YouTube channel, kindly click on the subscribe button and subscribe because I'll be dropping videos, quality videos weekly that will help to improve your trading, either synthetic, either forex trading, either stock trading, any trading of the kind that deals with charts. Kindly click the subscribe button to get timely updates from my videos. So now let's get into the chart. So today's video, I said I'll be teaching you how to use the Fibonacci level strategy to trade the chart on. We'll use so we'll be focused enough. We'll use forex trading as a case study. So how to use the Fibonacci level, or what is the Fibonacci level? Fibonacci level is a tool. The chart is more of like an indicator. It is used to analyze the charts. It is used to, the goal in trading is to be at the right side, to be at the point where it is right to buy, and it's to be at the point where it is right to sell. So the Fibonacci is a tool that helps to help you to get the level whereby the price will retrace to before it continues its movement. The chart move in impulsive consolidation, impulsive consolidation, or if you know it as higher high low, or lower high lower low. So the fifth level is used to identify how much price will retrace to before continuing its movement. So let's get to the chart. In today's video also, I'll be giving you my the levels I use. I will make use of 3 levels in order to have a consistent result. So I won't just have a consistent result, and that's what I use in my trading plan. So Fibonacci level is just a tool. It's a technical tool used by most price action traders. It works always with all charts. If you use it to analyze, no strategy has a 100 trading rate. If you are to use it to analyze your chart in 10 trades, I'm sure you should have 7 win trades using the Fibonacci strategy. So let's get to it. First, I would like to show you the tool which I use. This is the Fibonacci tool. Look at it, fib retracement. Fib retracement. From the one retracement, you have to understand that retracement means when price is retracing. The market move in waves. Like I said, the markets move in waves. It moves in waves. It moves like this, and like this. So the Fibonacci is actually a tool to identify a retracement zone. So let's write an example. Okay, first let me show you the tool. This is it. If you want to screenshot the settings, I will make use of just these 3: 62, 70, and 79. If you want to screenshot the settings, let me give you time to screenshot it. Look at it. This is it. Okay, I'm sure you screenshot it. Those are only the levels on my feed level. These are the settings that apply to your chart to have a nice result in using Fibonacci strategy. So let's get to how do you draw the Fibonacci level. Let's say a price is moving, let's say an uptrend market where the price is creating an higher low, which on the higher low, creating on the higher high. Good. So now you need to know where the price will trace to before it continues the movement again. So for these are higher, these are higher low. You need to know where price will trace to before it continues back its movement. So that's where the help of what fib level comes to play in. And you draw it from your previous higher low. You draw it to where the higher high started, where the retracement started. So when you draw it, these are the 3 levels I make use of, like I said. So you are expecting the price to bounce up from this level, either the 62 level, the 70 level, the 79 level. What you're expecting the price to do is to bounce off these three levels. And the characteristics you find when price is bouncing off this level, because I myself, I don't spend all that. I love to see the price action play out in these levels before I execute my trade. Obviously, you'll see impulsive movement coming down or bottom on your lower time frame. And when it gets to this level, you have to identify a shift of structure here, whereby you will see price where the candles will, the momentum of the candles will reduce. You start seeing weak candles, you start seeing weak rejections. That's when you know that level is valid. So what you are trying to do is to identify with the tool where the price will continue its movement. The price, like I said, can bounce up from here, and before it continue back its movement. So price can push back to continue its movement like this and go again. There are chances sometimes it's reject from the 62, reject from the 70, reject from 79. So it can reject from any of these three levels. Those are the value levels. Those are how you, this is just the way you use it. And if you want to use it on a downtrend market, it's still same thing. It's inverse. It's just like you are taking an head and shoulder chart pattern. Either it's inverse or not inverse. It's just the same thing. So if the market is splitting lower low, lower high, lower low, lower high, this strength, lower low, lower high, lower low, lower high. To use the one thing I need to tell you, in order to understand the proper usage of the Fibonacci retracement tool, you have to have proper understanding on market structure. In this video, I'll be covering up market structure, possibly my upcoming videos this month, February 2024. I will be possibly incorporating market structure into the tutorials. So you have to have proper understanding of market structure before you get to use the Fibonacci. You have to understand the concept of higher lows, higher high, higher lows. You have to understand the concept of break of structure. You know, at this level, here we have a break of structure here. We have a break of structure, whereby structure has been created before. We have a break of structure targeting with US and keeps creating that break of structure. Let me clone it so I can have more of it. Let me clone it more. Let me clone it so I can use it here. Use it here. Use it here. So you have to have the understanding of break of structure. You have to understand the concept of trend, understand the concept of impulsive consolidation before you get to have a proper understanding of retracement or how to use it very, very well. So now we've had a lower high here and a lower low now. The price needs to create a new lower high. It needs to make a corrective movement back, and we don't know the depth of how the price will make the retracement. That's why the fib level retracement tool is there for you. This is a downtrend market, so you pick your tool. This is how you draw your fib. You draw from the previous lower high to the next lower low. Yeah, that's your next lower low, and you watch how the shift of structure happen on either the time frame you have, on the 15 minutes, you have on 1 hour. But obviously, you get to see it sharp on the lower time frame, not going scaling down too much on the lower time frame. On the 4 hours, you get to see the shift of structure. Because that sometimes it's not that easy to see shift of structure easily. If you have a 4 hours time frame, it's not easy to see the shift of structure, like change of character or the likes. But when you go down to like maybe on 15 minutes or 30 minutes, you will get to see it clearly. You can use the best time frame to actually use the Fibonacci level is on the higher time frame to identify the direction of the market, to understand where the price is going to reverse to. So it's very advisable to use it on the 4 hours, on the daily, and on the weekly. If you are trying to use it also with your entry, use it on your 1 hour, 30 minutes, and also on your 15 minutes. You will get to see the shift of structure there. I think a shift of structure, you can see a shift of structure of candlestick changing from strong bearish candlestick pattern to a weak bearish candlestick, and start seeing multiple week rejection, something like this. And when you see that, then you start seeing impulsive movements of bottom in the downtrend, start seeing a bullish engulfing candlestick at that area, meaning the shift of structure is about to happen. So this is the key level, like I said. So now price can either bounce from this level also on the downtrend, can bounce from this 79, let's go to 62 for 70 and 79. It can bounce from there and make the retracement. So what you're going to do, is what position yourself in those key levels. You position your buy entries. If you are a trader who is busy, not always the chart, after backtesting this, you have to backtest this very well. This strategy, you have to backtest it very well before using it on your live account. If you are good with pending orders, when you have the price there, when you have withdrawn your free level, you identify the trend. Trend is very, very important. Trend is always your friend. But identify the trend of the market. What you have to do is to use the fib level, identify the structure, and to pick your fib level and draw it. Then, if you are taking your sell order from here, you put your pending sell order here. Always do well to set your stop loss above the key level. Few pips above the key level, and you target the next structure point. Always take a trade where the reward outweigh your risk. 1:3 is also a very, very good risk reward. A positive good risk reward will make you have a consistent result and a profitable trading. So you use it this way. These are the 3 key levels. This is the bearish momentum, and this is how it's being used. For the bullish momentum, also you position your buy orders from the first pending orders. If this is how you want to use it. And if you want to use it by, if you are active with the charts, you watch the shifts of structure, you watch the candlestick pattern there, how it changes from bearish to a bullish momentum. Yeah. And you set your stop loss below the key levels. You set your stop loss below the key levels. So let's get to the chart and let's have practical things there and how it's being used on the chart. This is good on the 1 hour time frame. Let's go to the higher time frame. Let's do it on the higher time frame. Let's do it on the higher time frame. Okay, let's make use of actually what price. I'm looking for a clearing price action. This generally, so it's kind of choppy. You can also use in the choppy market available. But let's look for something very clean. So this, you can see this. Firstly, I said you have to identify the market structure. This 4 hours. You can see this was a downtrend before. Like I said, you have to have a proper understanding of market structure before you get to use the fib level. If you observe here, there's a shift of structure here where price broke the previous lower high and pulled back and started creating a fresh structure. So you have to have the proper understanding of this before you get to use the Fibonacci retracement level. So now let's quickly identify it. Firstly, you want to identify your break of structure. We already know the trend. I think I have a template for my break of structure here. And template for it. Yes, let us make use of this too. So the very, very best thing to do is to identify the previous. Okay, yeah, let me look at this also. Let me clone this. Sorry, clone. Let's bring it to this place. Yeah, 6 very done. So picking it, you pick your feed level from the previous um, is it higher low? Yeah, to the next higher high. You can see. And what do we get? It's surprise rejecting from here. I want like characteristics to see the shift of structure when I say using the higher time frame or using candlestick. You know this. Well, I don't want to shift to the lower time frame. Not using 4 hours to take the trade. See the shift of structure from here. Look at drawing it from here to the previous to the next higher high. See one thing you won't get, one beautiful thing you get a very strong structure point here where price has been rejecting for a while. And now you can see an engulfing candlestick pattern rejecting from that level. It breaks your profits here. And imagine you placing using pending orders. For those who I think that there are different types of entry. We have the aggressive entry. Well, the aggressive entries are also depending on that traders. Those are more of the aggressive traders. Those are not being with charts, just place your pending orders and you ask the market to do its thing. You set and forget and you come back to see the result. So look at putting your stop loss little pips below the feed level and tangents 1:3. 1:3. 1:3. So 1:3, you can see. Oh, sorry, right back. Right. You see, just started to 1:3. Imagine, very nice trade, very nice trade. That's what we're trying to see a practical results to it that deletes the feed there. So now, should I just delete this part? Okay. Now looking at another place where the price created its impulsive movement. There's something funny here, but sometimes the market does not make a clean thing. There's little consolidation here for the break of structure, creating more of like an higher low here. Because let's see the week down to this place. Sorry. Yeah. And again, when drawing it, you place it to the week. Previous week. Look at it. So we are using it with the previous week. So you can see where price rejected here, even though the body of the candle tried to close below the feed level, and if you can identify, you see price are rejected here, forming more of like a double bottom to that area, and this is where price has been rejecting for a while. Price has been rejecting so much from this place for a while. So looking at this, you can see characteristics, like I said, you get to see an engulfing candlestick pattern. That's it. And targets a 1:3, put your stop loss below. Let's say you're entering this, you're entering here, yeah. Put your stop loss. The entrances to your stop loss was very tight to get to stop you out. Those are for the aggressive trader. But for the conservative trader, after seeing the engulfing candle, when it is right to take when you put your stop loss, even below the candlestick. But an aggressive trader, the entrances, if your stop loss was too tight, it will get to stop you out. This works on any time frame and on any pair. This strategy works on any pair, on any time frame also. But it's advisable to use it on the higher time frame to get an accurate result. Sorry. Trying to make sure we are calculating the risk to reward. Just a practical example. Looking at this again, on that break of structure here, price was able to push massively to the upside. Let me delete the feed here. Now let's take this last example before I would love to do the psychology, talk about it. Yeah. Even though this closed below, even though there's a break of structure here, this when gold was trying to attain a new high in the market. So let's switch to another nice trading market. Oil price broke here. Let us give one example again. Yeah, I would love to identify the downtrend to this market. Downtrend using the fib level. Maybe in the next part 2 of this video, I'll be doing that. So the fib, previous correction to the next correction, you can see price rejected from an engulfing candlestick pattern. If you are entering at the level aggressive trader sheet entry, then try that 1:3. Try that 1:3. So very nice. So 1:3. So the fib level works properly and works well. Works on any time frame. So that's the practical example on how we trade the fib level. Practical example on how we trade the fib level. So the tips I will give you to actually trade this is have a trading plan on how you are going to enter, which is this. You enter at the structure point. Whether you have to choose your entry model. Is it, are you going to be an aggressive trader or being conservative with your entry? Are you to spending orders? And having the right mindset to trading will help you. Trading is 10% technical, the knowledge is 10%, but the psychology aspect of it is covering the whole 90%. So we must do well to have a proper mindset to trade this strategy. It's very easy. It comes a simple approach. Understanding the market structure, understanding change of character, understanding how to draw it, and using the fib level. Before I call it a day in this video, I would love you to check this to all the settings again so you can save it and implement it on your chart. So we have the 70, 79, 62, 1. These are just the levels I use. You can screenshot it and make use of it. Thank you for watching this video. If you've not subscribed, kindly click on the subscribe button. And if you've not liked this video, like this video now and drop a comment. Love to see you in the next video.